It is day 3 of our boot camp, and welcome back, ladies and gentlemen. Today we are diving deeper into our boot camp, learning more about futures and trading in general. And today we'll be talking about market structure and price action. This is going to be an insanely informational packed video, so make sure you guys stay until the end. Now, we are going to be covering everything that you need to know about both market structure and price action. I'm going to break this down so you guys can understand it, whether you are a beginner, intermediate trader, or even advanced trader. You will be able to get useful information from this video, so make sure you guys stay tuned. Now, before we do jump into it, I want to say thank you guys for the crazy support that we have seen so far. We still have many more videos coming out for the rest of this week and all of next week, so make sure you guys do drop a like, subscribe, turn on those post notification bells so you guys do not miss another video. And lastly, make sure you guys click the first link in our description down below, join up on our free Discord, because we are doing giveaways every single video that gets 50 likes on this boot camp. Now, we are probably going to break that, so make sure you guys do join up. You guys will get access to enter our giveaway, where you guys can either get a free month of premium or you guys can get a free eval given to you by me. So I don't want to waste any more time. I want to get right into it because I have been loving making these videos. I am all amped up. I've had my coffee and I'm ready to talk about market structure and price action. So let's go ahead and jump right into it. Now, when it comes to market structure and price action, what you are looking for with market structure is you want to understand the bias, where market is looking to go and why. Okay. The price action side of things is going to be how. How is it moving? How is it performing? What kind of time is it taking for us to make this certain move? And we'll break that down more as we get into it. But for market structure specifically, you have two sides. You have the bullish side, you have the bearish side. Of course, we could have this side where we are consolidating and doing nothing, but we don't have to worry about that because you're not going to be trading that. If you see something where you can't establish a bullish or bearish bias on the market, you should not be trading because the market does not understand where it wants to go. So there is no reason for you to take a trade when the market clearly has no idea of which direction it wants to go. That is gambling because you have no idea where it's going, right? So with market structure here, you're obviously going to have bullish and bearish. Your bullish market structure is higher highs and higher lows. As you can see, making a higher high and a higher low, continuing upwards. Bearish, the complete opposite. Lower lows and lower highs. Obviously, how you're going to establish this is you can draw it out. You can do whatever you need to. But at the end of the day, you are looking for higher highs and lower highs for bullish market structure, looking like the market is continuing upwards. Now, of course, you pair this with some other things that could let you know, hey, even though we have a very bullish structure, we are coming up against resistance and we may now flip bearish. So there is always that point of understanding both sides of the story. Although we look bullish, that does not mean that the market's going to continue up forever. We know that. We know that at some point you are going to fall into a bearish structure. So we have to be very, very ready for that switch. And we actually want to capitalize on that switch in that reversal. Now, we'll talk more about how to actually do that, especially when we get into our liquidity video later this week. But with this bullish structure and bearish structure, it is very, very important that you guys do establish a higher time frame, actual draw of your market structure, whether that is bullish or bearish. You want to be looking on the 30 minute, 1 hour, and 4 hour to try and establish your bullish or bearish market structure. And what this is going to help you with is really your confidence across trades. If I'm entering a trade on the 2, 3, or 5 minute time frame and I have a bullish 4 hour fair value gap letting me know that we look like we should continue up, well, I'm going to have much more confidence in that trade and even more confluence to take that trade in that direction. Now, let's say I'm looking bearish. I really think that this short is going to play out on the 2, 3, 4, 5 minute time frames. And it may very well play out, but you don't want to go against your bias. You don't want to be married to your bias either. But when you are seeing something like a possible put opportunity on the 5 minute time frame, but we're looking at a very bullish overall market structure, well, that could be a fake out on the lower time frames. That could just be a sweep. That could be some manipulation from the market before we actually see that continuation higher on the higher time frame. And additionally, if you are able to line up with your higher time frame bias and you are correct, of course, we won't be correct every single time, but when you are correct, you can enter a 5 minute trade, right? And let's go ahead and erase this here. Let's say we have a very, very bullish 4 hour time frame. And let's say our 4 hour time frame looks like this. Okay. Whatever this is. Well, say we want to enter on the 5 minute time frame, right? Well, we might get our entry right here and we might be targeting right here, but because we have a bullish structure, we know that we can continue this trade up if it's going to give us that opportunity. And that is how you get those massive winners, because we could play this up to here. But once we get there, it looks like we could continue up to here. And once we get up here, well, we could make a new high because we have been continuing to make these higher highs and higher lows. So although I entered on the 5 minute time frame, I could be in this trade for 2-3 hours, just continuously raking it in as long as market does stay bullish. And if it does flip bearish, let's say we see something like this, where we just talked about in our last video, chart patterns. Let's say we see something like this. We're making higher highs, higher lows, but then we see something like this, a double top form, right? So we have this double top form. Then we can see once we start making a new lower low, well, we can hop in this trade here and take it all the way down, right? That is what the big understanding, the overall picture is with market structure. You want to make sure that you are not being susceptible to any single time frame. You want to make sure that you can line up as many time frames as you want. You want the 5 minute, the 15 minute, the 30 minute, the 1 hour, the 4 hour to all be looking bullish if you're getting into a bullish play. If you're looking bearish, you want it to all look bearish, unless if you're scalping or going to be in this play for 5-10 minutes. Okay, but if you're looking for a true, actual good risk reward where you are able to make, 3-to-1 on your risk to reward. You're pulling in 3 times amount the profit as your loss. Of course, we will still lose these trades from time to time. You are never going to win 100%, even if you have your bias right, even if you take the play 100% correctly. You will lose, and that is not the point that I'm trying to make. The point that I'm trying to make is as long as you continue to do it correctly, your wins are going to outpace your losses to the point where those losses really don't matter. And if you are able to get your discipline and your actual your psyche to understand that losses don't matter and they're part of it, and the statistic of, say, even you have a 90% win rate, when you lose a trade, that is the setup for you to go win a trade, if that makes sense. So if you have a 70% win rate, you're going to lose. You're not going to lose as much as you win, and that's good, but you are going to lose. So you have to understand that those losses are nothing more than the statistic. As long as you do what you can, you stay to your rules, you stay disciplined, you follow everything that you need to, and you perform and execute the best way that you can, losses are merely part of the statistic. They are nothing more than that. Doesn't mean you're a bad trader, doesn't mean you don't know what you're doing. Now, of course, it can if you aren't following your rules and you aren't staying disciplined and you aren't understanding market structure. But as long as you stay to your rules, the losses are simply just a statistic. You have to lose to win. It's part of it, right? We've seen, Hall of Fame baseball players. They've struck out thousands and thousands of times, and they're still Hall of Famers. A Hall of Famer for baseball has to hit about 300. Not nowadays, but back in the day, 300 was kind of the baseline for a Hall of Famer. That means that they lost 70% of the time. But that's part of the statistic. That doesn't mean that they're bad baseball players. That actually means that they are one of the best. Failing 7 out of 10 times meant that they were some of the best baseball players out there. So that is the point that I'm trying to make with this whole understand market structure. You will get bigger wins and you'll have much more confidence in your trade if I am looking bearish and my overall time frames are telling me bearish. Well, if I get in this play and we start to chop a little bit or we start to move, maybe we move a little bit higher up. Well, I still have massive confidence in my trade because I know on the 30 minute, the 1 hour, and the 4 hour, we look very, very bearish, although we might have just gotten one green 5 minute candle. You know what I'm saying? So having an understanding much deeper than the trade that you're in, and understanding even if, say, I want to take a play from a stock that's at $500 all the way up to $550. Well, if market structure is telling me that we can go to 600 or 650, that's great. Whether I'm going to take the play from 500 to 550 or 500 to 600 or 500 to 650, that doesn't matter. You want to catch the win on the inside. So once again, if we have bullish market structure, right, you can play this multiple different ways. We can take a play like this. We can take a play off the lows and play it like this, back up to those highs. But we can also take a play like this once we break these highs and play it to the new high. You can do whatever you want, and especially when you know where the market is going, have a good understanding of where the market is looking to go, you will succeed in that because you have an understanding and you know that there is a higher time frame draw, especially when we get to liquidity. This is very, very, very important, right? The market likes to go in these directions that are back and forth so that it can sweep out, like we were talking about in the last video, those bad traders, those retail dumb money traders, because we know that we want to be those smart money traders. We know just because the market may look like this, right? Just because the market looks like, oh, it's going down, right? Oh, yep, we're definitely getting into sells. No, because we know, hey, there might be a fair value gap here, or there might be, we might have just swept some liquidity on a prior low. Whatever it is, you need to have that understanding. We'll talk about how to find that understanding in just a second, but I do now want to talk about price action. Now, price action is very intuitional, okay? Now, I hate to say that because it's hard to really teach how to find good price action, but a few things here. I'll tell you right now, when the market looks like a barcode, get off. I have seen so many traders, including myself. I've made this mistake and I will make this mistake again. I'm telling you that right now. When the market looks like it's doing nothing, leave it. Leave it. There will always be another opportunity as long as you are able to inform yourself, the discipline, and convince yourself truly that that next opportunity will come. So if the market is looking like this all day, you know, what is there to take? If you really want to take, that 5 minute scalp from here to here and then from here to here, yeah, you can do that. If that's your strategy, great, do it. Do it. But I'm telling you right now, 99% of traders are not scalpers, okay? You might think that you are. If you need 50 bucks on a trade, that's a great way to go. But do not trade this because you know what happens is when we have market structure like this, where we aren't making new highs, new lows, anything like that, this is consolidation, okay? And then what realistically happens from this is say you enter this trade right here, okay? Say you enter this trade right here and you want to capture where is my colors at? All right, whatever. Say you want to capture the move back up to here, right? Say you want this as your profit, right? Well, watch this. Eventually, the market's going to do two things. It's either going to go like this and sweep you out, and this is going to hit your stop loss, and you're going to lose anyways. Or eventually, the market's going to pick a direction. And of course, you can get lucky and you can go say, if I was getting into shorts here and the market goes like this and continues down, if I was in shorts, good for you. You got lucky. That is not a good trade. That is not a good strategy. That is not a good habit to create for yourself. So do not do that. Okay. You can go post your profits and you can go say, guys, look at how good of a trader I am. I made X amount of dollars. Yeah, good for you. Next time you do that, you're going to get screwed. And we know damn well you're not going to be posting that on social media when you lose. Okay. So I highly advise when the market looks anything like this, and I'll show you guys some examples because the market's been looking like this for months now. Don't take a trade. Okay? Do not take a trade. Right? You do not have to take a trade every day to be a good trader. And I'll tell you one thing. The better you get at trading, the less you trade. Less is more. Less is more. So think about it that way. And then when the market does, say we see a day like this, right? Where we're just chopping, right? Well, if you are able to wait until we break this range, okay, and then come down on top of these highs, well, now you can get that good entry because we made a higher high from right here and we can follow this trend line up. But if you try and get the trade in back here, well, you just blew all your profit for the day. You just hit your max drawdown. You don't have enough buying power to actually get in on that good play because you didn't wait. You thought that this was going to be the only opportunity all day, but you didn't give the market an opportunity to show you that opportunity, if that makes sense. So take your time. The more time that you take, yes, I will tell you this right now. You are going to miss your A plus setup every now and then. You'll miss it. And you know what? It will come again. What's going to happen tomorrow? Sun's going to come up. What's going to happen tomorrow? Market's going to open, okay? Except for on Saturday and Sunday, of course. But market's going to open. Sun's going to come up. There's going to be another opportunity. And if there isn't an opportunity that day, guess what? The next day. Guess what? The next day. Guess what? The next day. I'm telling you right now, if I didn't run the Discord and I didn't have to send out some alerts every single day, I would not trade every day. I mean, you guys know, you guys see how much I change my sizing because there are some trades that I'm confident in, and there's some trades that I'm still confident in. But I also do understand that the market, this is not an A plus setup. Okay, just because all of our rules might be followed doesn't mean that it's an A plus setup due to market structure, due to price action, and price action is the biggest killer of new traders. New traders cannot sit still. I still struggle with it. It's very hard, especially when I have to sit at the charts all day, watch the charts, and be ready for those alerts. It is very, very hard to not convince myself or have that placebo effect of this is the move, we have to get it. The more you sit back and you wait for that move to come to you, you will see a lot more success, okay? And especially when the market is in that barcode formation of just up and down, up, down, up, down, up, no expansion. That's consolidation. You want to get in on the expansion. So one more time, if we're seeing this, that's the consolidation, okay? you want to get in on this expansion. Okay, so when we are seeing this consolidation, okay, this is where you literally just draw a box like this. You literally draw a box like this. And once you see that we are able to come back and create a new high and a new lower high, now getting on top of that consolidation, well, what has happened? Now we have formed what could be, like we talked about last time. Maybe it's a bullish flag, right? Maybe this is a higher time frame bullish flag, and you know what's going to tell you that? Your market structure. Okay, so one day we might see a massive green day. Then the next 2 days we might consolidate, forming that flag. And there might not be a trade. But then I'll tell you on day 3, you are able to get in on this entry, put your stop loss like that, put your TP like this, and go ahead and win this trade outright because you waited, you followed your rules, and you respected the market. And so in return, the market's going to respect you and reward you. Okay. But trying to force a move is not how it works. Like we talked about in the last video, you're not going to push the market where you want it. The market is going to go where it wants to, and you can either follow it and win, or you can try and go against it and lose. I'm sorry to inform you that the market has over $30 trillion in it. You are not having a single impact. You are not even a fly on the wall. You're not even a grain of sand in the ocean. You are nothing to the market. So stop thinking that you are going to have an impact, right? You're a great person. You mean something in this world. You are very valuable. But in the market's terms, unfortunately, we mean nothing. We are a speck of dust. I mean, even if that, right? Your $2,000 that you're putting into a trade or $100 isn't doing anything. So stop trying to think that you are going to change the world with your play. Stop trying to think that because you entered, the market's going to go in that direction, right? Understand where the market is going and follow it, right? Back it up, move with it, and inevitably get better with your market structure, understanding what the overall time frames, higher time frames are going, because then you can go down to a lower time frame and understand how we are going to get there with price action and take the corresponding play on that way up or down. Okay, so let's go ahead and jump over to the charts, take a look a little bit deeper into what market structure and price action is actually going to look like on some real examples. So now that we know what market structure and price action are, let's go ahead and connect the dots by taking a look at some real world examples. That is impossible to say. I don't know if I have a stigmatism or something, but I cannot say that. Now, jumping over here, I first want to show you guys what actual dog shit looks like, pardon my French, but this is M&Q, and this is what absolute crap looks like. The price action and the market structure has been horrid for the past 3-4 months. Okay, so I'm going to show you guys what bad looks like, then I'll show you guys what decent looks like. Okay, so this is what I would say is bad market structure. Now, yes, I can kind of define a low that's put into place, a higher low and a higher low, but we don't make a higher high. We have this high, we don't make a higher high, so we are still in a bearish trend of some sort. But here's a little bit of a decent look right here. So this is somewhere where you could say we put in a high, okay, then we put in a low, then we put in a lower high, then we put in a lower low, okay? So that is an area where you are looking at structure. So right here, once we break this low right here, I know that we are most likely going to continue down, especially when you look at other things like our structure or our actual technicals right here. So taking a look, once we break this low and we break through this resistance or support, and this support, well, yeah, I have a pretty good idea that we're going to go down. And once we come back up and retest this, we can take this put down. And I remember taking this put down because the BuzzBot alerted an absolute banger that day. So that is the point that I'm trying to make of you can find your higher lows, lower highs, all that kind of stuff. But right now, market looks pretty bad. So, but here you go. These are your high put in place, your low put in place, then your lower high, and your lower low. So that is bearish structure. Now, for example, let's just say, well, we could use this. Now, this is an example of bullish structure. Not great, not beautiful. And actually, let's go ahead and jump over to what I wanted to talk about, and that's silver. Because silver does look a little bit better, okay? And silver could be starting that move to turn around because we saw this massive sell-off, right? So we see high get put in place, okay? Then our low, okay? Then we see a lower high, right? And it happens to be in this daily fair value gap. So we could have gotten a great entry right there. Okay, and then we see our lower high or lower low get created. So this is your trend. Okay, so anywhere in this section right here, you could have been looking for a great trade. And look, this is one of the best trades right here. Is this big ass candle right there where you most likely could have found a great entry off of your market structure. And with good price action, you could have taken that all the way down to your lower low, right? And really, for these plays, by the way, you are looking for obviously a great entry, but you want to put your high or your stop loss, I'm sorry, for this short example, you want to put this slightly above the high that it made. And then you want to put your TP really a little bit higher than that most recent low. Now, from there, I would recommend taking trims, and you can play it down to this lower low, but a lot of times it is a little bit harder to establish a target for those kind of things. Now, if you are able to use things like the Fibonacci retracement, which we do teach, you can find great success with targets on that. Now, I do want to talk about what's happened recently, because although we haven't put in a new high in comparison to this one, we did go ahead and make a high. Then we made a higher low in comparison to this low. Now we are making a higher high in comparison to this high. So we are starting that trend. I don't know why the thing just froze, but see, we put in the low, we put in the high, then we have the higher low, then we have the higher high. Okay, so there is an example of exactly what market structure will look like for both sides. Okay, you have the high put in place, then you have a low, then you have a lower high, then you have a lower low. Then things flip around. Okay, we have a high, then we have a lower high, then we have a higher high. So depending on what happens here, I would have to guess that we are going to come back down, make a higher low somewhere probably in this area. Okay, make this higher low, and then we'll continue higher. If not, what is going to happen is something like this, where we are going to come down, make a new lower low, come back up, new lower high, and then continue downwards, right? So we have a new lower low, okay, and then a new higher low. So it is going to play out in that way where you can be wrong. Your bias is not going to be right. And this is a scenario where if my bias was wrong, it would look something like this. So you need to have an understanding of both sides, because you're not going to be correct every time. I'm not correct every time. You're not. Warren Buffett's not. Your favorite trader is not. It's not going to happen. Stop thinking that it is. Be open to being wrong, because the sooner that you're able to do that, the sooner you're going to be able to capitalize on that wrongdoing of yours, right? So if I'm looking bullish, but then we start moving bearish, I want to have that understanding of the bearish market, because I can still take that play, right? If I'm looking bullish and the market's telling me bearish, what did we talk about earlier? I'm not moving the market, okay? I'm not doing anything to the market. So if the market's looking bullish, or sorry, if the market is looking bearish, but I'm thinking bullish, I don't care. I am now bearish with the market, right? Because I am going to follow where the market is going and take that corresponding play. I'm not going to try and force this $30+ trillion market to go in the favor of my measly little $1,000. They do not care. That is literal chump change to them. They'll just take that, put it onto the pile, go ahead and write that down on the books, mark, dot their I's and cross their T's and whatever, and move on. While I'm sitting there crying because I don't understand my bias and I'm married to it, right? So don't get like that. Understand that you're going to be wrong. Okay. Take your ego out of it. Take your ego out of it and understand that even if you are wrong, you should have an understanding of what is going to happen now. Okay. So if the market's not going to go up, it's going to go down. Right? So understand what's going to happen when the market does go down. That's really what I'm trying to get at here. Whew. Now let's go ahead and talk about what an example of good price action versus bad price action would be. Okay. So for example, today's price action, pretty mid. I'd give it 5 out of 10, like pretty exactly mid. There was a play that you could have taken. We took this play this morning, right off the break of orb, and played it up to yesterday's highs. So this was the play that we took. Now, nothing great, nothing crazy, nothing that I'm, impressed by, but something that we were able to take because we did understand that our overall market structure looked pretty bullish this morning, as we did see this come down and create this demand zone where we are looking to bounce out of. Okay. And we also did know that this was our higher high that we were putting in place. So although this play didn't look perfect, we were still bullish and we were able to execute because we understood where the market was looking to go. Okay. Now, here is an example of some better price action. This isn't too bad. Now the only thing is open was pretty rough. It's really hard to say, and especially with the market right now, like you're gonna see a lot of bad examples. I would give this maybe a 6 out of 10. This is slightly above what we have seen recently, but overall, if I were to compare this to good price action, this is probably like a 4. Okay, so the only real good trade that I see here is the double bottom. So you guys know last video we talked about our candlestick patterns. Well, this is our double bottom right here. Okay, and you could have taken this play realistically back up to this high. Okay, so this is your clear double bottom, right? And we also understand that we are a little bit bullish. So, yes, we push down. Maybe we're bullish on this day. Well, we push down. That's okay. If we can look for that entry on that bullish model that we expect, great. If not, we need to be looking for that play somewhere in this range. So if you're taking that play off the break below this low, where we make a new low and take this down to the yesterday's lows, because we did take this play, and we took this play down to yesterday's low, which I believe was it was a little bit before this. It was around this candle right here. Yeah. So exactly what I just put my thing at, pretty much. So look at that. Look at that accuracy, boy. I know what the fuck I'm talking about. So we ended up taking this play out of orb and got a really nice bit of profit here, but really the price action wasn't too great. So you're gonna find days where you have to kind of adjust your strategy to the market, right? You're not moving the market's gonna move you. You better be lined up with it, or else you're fucked. Okay. So here's an example of it's hard to say, okay, because this is very unpredictable, but there is times where the price action is very good. And that's another point that I want to make. There are going to be times throughout the day where you are going to have great price action, and there's going to be times throughout the day where you have bad price action. A lot of the times, for example, you are going to see great price action in the morning, or you are going to see great price action about 2 hours after open. So here's an example where we have not so great price action in the first 2 hours of market open, but then after that, we have some pretty good price action here. This is some pretty good price action right around here, right? So let's go ahead and identify and highlight this. It's some pretty good price action, right? We ended up taking two of these plays. We ended up actually taking the back-to-back play here where we did take this off of orb high because orb high was essentially right here. So we took this play off of orb high. It was a scalp and then it turned into a pretty nice play. I don't know why the screen keeps glitching out, but let's keep going here. This is the play that I'm talking about that we took off of orb. We were able to get this entry right off of orb. We put a limit buy, and then we ended up selling once we broke through this 15-minute fair value gap. We're on the 5-minute time frame right now, but there is a 15-minute fair value gap right there. Now, once we did actually close that trade, we did notice that we were forming this double top, which once again, we talked about and used this exact example yesterday in the trade and in that obviously video. Now, we were able to get this entry off of a 2-minute fair value gap retest and rejection that we were able to take and play all the way down to orb. And then we actually ended up sweeping through that. So we took trims at orb and then actually swept through that where we did create that lower low. Now, obviously, we weren't able to take this entire play, but we were able to take something like this, right? I do believe that we actually left this play until we did get stopped out on this 9 EMA right here. So still a great play, but a great play. And that is exactly what decent price action looks like. This is actually what good price action looks like intraday. Now, we're not going to get price action like this all day, and you can clearly see that. I would say that if we had to mark this out, this right here is the only good price action that we get all day, right? So you need to look at your day as well. Of course, I can't tell what's going to happen at the end of the day. Of course, I can't tell the future, right? But you have to notice when this price action starts to come around, right? So around this point right here where we're coming up to our high, and by the way, this is PM highs from that morning. Okay, so we know that this is going to be an area of rejection, possibly, or at least resistance. So we were expecting something to happen here. Either we blast through it or we reject off of it. We're not expecting a lot of consolidation around this zone. Okay, we're expecting a direction to be made. Well, that direction's down. So we can either take that play down. In my opinion, I like to wait for that. And then we can go ahead and take that play back up off of orb or whatever it's going to be. Find that time within the day that is going to give you the best opportunity, right? So this is what I really want to harp on, right? And this is a big point of what I was talking about how newer traders get demolished by not understanding price action and market structure. If you are not able to find that 15 to 1 hour, so say this. Say you sit around all day waiting for your structure to come, right? You're waiting all day for good price action and that doesn't come. Guess what? You didn't lose anything, you didn't make anything, and I'll tell you right now, not making anything and not losing anything, doing nothing is much better than losing. As much as it sucks, you would much rather sit at that desk all day, look at the charts, have nothing come across your screen, and in the day, in the exact same spot that you started, than take one of these horrible price action plays, get chopped up, get swept out, lose realistically. Yes, you can get lucky and cool. Once again, you'll post your little thing on Snapchat, and then we won't see that post the next day because you lost, right? The statistic like we were talking about, that will weed itself out, right? If your loss is, if you lose 70% of the time, well, yeah, you're still going to win 30% of the time. So have fun with those social posts. But we know that you are not going to be able to actually make consistent profits because you have no idea of what good price action, bad price action looks like, so you can never tell the difference, and you can't capitalize when it's there. The point is capitalizing when it's there and doing nothing when it's not. When the market looks like shit, don't do anything. Don't. There's nothing to do anyways. I mean, what are you gonna do, right? So this thing froze again. God damn it! So go ahead and take a look at this day's price action. Go ahead and comment down below what you guys think about this price action. We'll all know what you guys are talking about. So I'll give you guys a few more seconds, but yeah. So I'm gonna tell you guys, I'm gonna show you guys an actual picture of what this price action kind of reminds me of. Yeah, complete and utter dog shit. This is literally the worst price action of all time. Do not trade this kind of stuff. Look at this range. I mean, look at this range. Let's go ahead and mark out our orb and see what actually happens. So there's orb high, and there's orb low. We don't even fucking break orb for, like, look at, what is this, bro? This is nothing. There's zero trade to be taken this day. Okay, and if you did take a trade, whether you won or lost, it was not a good trade. I hate to say it. Whether you won or lost on this day, you did not take a good trade. There is not a single good setup here at all. At all. At all. At all. You could not tell me. I don't care what your strategy is, unless you are scalping, okay, and you scalped off an orb low twice, or you scalped this orb high right here. This is maybe the only good play. This is maybe the only good play. And I will still tell you one thing. With price action this bad, the fact that you trusted this play, still not a good play. Just gonna be honest. You should not trust a play like this with price action like this to play out. You just shouldn't, okay? There was not a single play to be taken this day, and that is okay. And that is okay, because look, what happens the next day? We get those two great plays, right? More opportunities come. Two opportunities came, actually, because we waited. But we could have blown all of our buying power. We could have blown our accounts, right? Or we could have just done anything other than sat on our hands. And I'm telling you, it would not have turned out as well as us doing absolutely nothing. Now, here is an example of some pretty good price action. I don't know why this thing's going down to my balls, buddy. Come on. This thing really wants to get a look at the little genitals, brother. Yo! Well, the whole chart thing did it again. So I went ahead and marked out the entire day. These are the two plays that we took. We ended up taking this play off of orb right here. Beautiful play back up to those PM highs. Great, great price action so far into the day. Now, what happens in the middle of the day? We get some pretty bad price action. Now, everything right here, this is pretty bad price action, okay? Everything in this orange, let's say it calls orange. Everything in this box, bad price action. But what are we able to see? Well, we are still able to mark out things like this double top that we see, okay? And I'll tell you right now, we are able to establish a few different things. Not only that double top, but this trend line that we break right here, we break and retest and move down. We were also able to establish all of these touch points highlighted in this yellow. And then you want to guess where we got our entry? Yeah, right when we rejected off of this touch point, okay? This is, I mean, this isn't even a strategy. This is just, you would have to be an idiot to miss this, right? This is the easiest trade I've ever taken in my life, even with some bad price action. Okay. And why did I take this trade? Well, because look, resistance, support, 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 resistance, push down. Easy. Once you flip that, you can easily find which direction we're going. Once we flip this resistance to support, look how fast we move up. Okay. Once we use this as resistance, look how fast we move down. Once we use this as support, we move up, move up, move up, move up. Well, now we're on the other side. We're going to move down. And we could have taken this play all the way down. We only ended up taking it back to these PM highs. So we really ended up taking this play back to here. But nonetheless, look at this play. It was a fucking banger. Okay. Then we were also able to pass an eval on a little scalp down here. I believe it was this play down to opening price, or down to orb high. Sorry. So we took this play right here. It was a little scalp. We passed 2 evals on that. Nothing too crazy, but I did want to mention that. I also do have videos posted on this exact day because we were able to take 3 banger trades. So make sure you guys go check that out. But that is an example of great price action. So there are days where you're going to get great price action. There are days where you're going to get bad price action. There are hours within the day where you're going to get great price action. And there are hours within the day where you're not going to get great price action, but you always have to be ready. So like, here's another example of some pretty mediocre price action. There's times within the day where price action's good. There's time within the day price action's bad. Right here, price action's pretty bad. You don't want to be taking anything there. You don't want to be taking anything here. Okay. So I would honestly recommend to go through your, trading back test what you should be taking, what you shouldn't be taking. I don't think anything here looks good. The play off of orb looks good. And then the play out of orb off this double bottom looks good. But other than that, there really isn't much. Even this play right here, there's not many opportunities. So even if price action is good, like right here, we have some pretty good delivery right here, but there is no true opportunity. If you really wanted to, you could have got the entry out of this fair value gap right here. So you want to be aware of opportunities, but I don't really love that entry. I don't think that that's a great entry, so I wouldn't have entered there, right? But that is something that you want to go back and look at. So if you see it in the future or something like that, you can identify it, right? But this double bottom right here, you could have taken this play, you could have taken the orb low play, and I'm fairly certain that we would have taken this orb low play. It looks pretty good right there. Probably taking this down to those PM lows right here, and had a pretty small win right there. So really, really nice day, even though price action is pretty bad for most of the day. You want to be ready and able to capitalize on those small wins that you can get. And then a lot of those times they'll turn into bigger wins. Like something like this is absolutely crazy. Okay, so this is some crazy good price action. You better fucking hope you get into this play though, because what happens after an expansionary move? We consolidate. All of this, horrid price action. All of this, some of the best price action we've seen in months, right? But you're not going to get this, okay, if you're dicking around or you're waiting or you're doing something like that, right? So we could have had this imagine this green box came first, right? Well, imagine you use up all your buying power, right? And then our purple box comes and we have that nice flush. Well, you wasted your time, capital, energy, stress, all of that to get wicked out, to be confused, to have no understanding of the market, and you couldn't just sit there and wait for the move to come. You were trying to make that move happen, right? So I want to drill this into your head, and I know I've said it way too many times. I know I've rambled. I know I've said the exact same thing multiple times, right? But this is a true fact of understanding because I've had this issue, you've had this issue, we've all had this issue of over trading, over leveraging, oversizing, trading when you're not supposed to, or not trading when you are supposed to. And this is something that is going to help to ease that, okay, and give you a better understanding of when it is a good time to trade and when it is a good time not to trade, when it is a good time to get off the markets, not even look at them, etc. Okay. Now, I do feel pretty good about everything that we have covered in today's video. I feel like I gave you guys an excellent explanation of market structure and price action. I feel like I was able to give you guys a great example of what good and bad market structure and price action looks like. And I really do hope that if you were to take anything from this video, please take away the fact that you do not have to trade every single day. The less you trade, the better you're realistically going to do. I'm telling you that right now, especially as a newer trader. Set yourself a limit of one trade a day. If you are taking more than one trade a day and you're not profitable, you have a few issues. Either your strategy, either you are not following a strategy, or the strategy that you are following isn't confined enough to the point where you should not be seeing your strategy pop up every single day. You should not have a strategy where it is so common for all of your confluences to be hit that it's going to happen every single day. Unless or if you have the best strategy of all time, go for it. But for everyone, even myself, okay, orb isn't going to play out every single day. Our BB model is not going to play out every day. I'll tell you one thing, our BB model probably shows up once every week, maybe 2 weeks. But when it does, we are there capitalizing on it. And it's normally our biggest win of that 1 or 2 weeks. Okay, so we are able to make our whole week to months worth of profit in one single play because we took the time to wait for it and we took the time to understand when it comes, I'm going to capitalize on it. And then when it does, we capitalize on it. So please understand that taking more trades does not make you a better trader. It makes you a worse trader. I'm just going to shoot you straight. When you are looking for those plays, make sure that you do understand a few things. That being your overall higher time frame market structure, your market bias, where the market is looking to go. Where is the market looking to go over the next 4 hours, 6 hours, 8 hours, day, 2 days? That's what you want to know. You want to answer that question and then go down onto your smaller time frames and see, is there something that is going to align with that, or is there something that's going to prove me wrong? Because once again, you're not going to be right every time. You want to find those things that are going to prove you wrong because you want to be open to both sides. If you aren't open to both sides, two things are going to happen. You're going to miss those good plays to the downside or in that opposing side of what you have. And you are going to beat yourself up, be way too stressed, lose, not have an understanding of why you're losing. All of those things, all of those negative things, literally anything negative thing that you can think about in the market is going to come back to your market structure. If you don't understand why the market is moving in certain directions, you're never going to be able to understand how to you're not going to understand anything. I mean, I'm trying to find something, but you're not going to understand anything if you don't understand where the market's going. I mean, that's literally what we do as traders is understand where the market is going, but people won't take the time to take 5 minutes to zoom out and see where the overall market is going. I understand the 2 minute or the 5 minute time frame might be looking bearish, but if the overall time frames are looking bullish, well, you might be going back to test a little fair value gap, and then you're going to explode up on the 1 hour, 4 hour, or 1 day. Make sure that you have an understanding of all sides of the market. It's going to give you a much better chance to make that profit. Also understand that there is times where you aren't going to take a trade. There are times, like we talked about in this green box, you're not taking a trade because everything looks like garbage. Okay. There is nobody making money in that range. There is simply just people losing money. Okay. There is no trade to be taken. So why would you take a trade? Oh my God, my hairline is. Boys, I need to be making more money on the market. I'm trying to go to Turkey, bro. I need to get this shit done, dude. This thing's bad. You can see that up there, bro. Lord. Well, that's gonna yeah, I'm gonna go cry about my hairline now. That's all I have. That's all I have. We were able to get through a lot of stuff there. That was about a 45-minute video. So once again, thank you guys for tuning in. Once again, giveaway tomorrow morning live in our Discord, link in the description. If you guys want to enter that, all you guys have to do is drop a like. If we get 75 likes, we'll be giving away an eval. If we get 100 likes, I'll be giving away 2 evals. And we'll probably be giving away a free premium membership too. I'm really in the spirit of giving recently. We've been killing it on the market, so I feel like giving back. But yeah, that's all I have for you guys. I hope you guys did enjoy this video on market structure. Tomorrow we'll have our video on, let's see, what are we doing tomorrow? Fair value gaps. That is a great video. I cannot wait to make this video because we are going to be covering a lot of good things. So I will see you guys all tomorrow. This was Bootcamp episode number 3, market structure. Deuces.